Alright, what's up everyone? Welcome to another video. This is Dan here once again, and today was a nice green day, man. Today was exactly 1.5% in the green. That's a really good day for SPY. That's a really good day if you're holding long positions. And it could not have played out better if you watched my video yesterday. Then I was calling for a possible bounce in the markets, and it bounced perfectly. We came from this strong support level on the bottom here, and the price stopped just like I said yesterday at my resistance line near that 387 price point that I was talking about yesterday. Now, is this going to go any higher? A lot of investors are calling for a dead cat bounce. They do not think we're going to get that end of year pop. And then other investors think we're going to get that end of year rally. Some people call it a Santa Claus rally, whatever you want to call it. They think we're going to go up from here until end of year. So is this a dead cat bounce? If you think so, if you don't think so, just tell me, let me know in the comments, give me your thesis. I'd love to hear what you have to say. But other than that, let's jump right into the charts and let's see what's going on macroeconomically and on the technical picture. Let's jump right into it. All right, now the first thing we need to look at is the price action for today. And you can see how in overnight trading, this nice little uptrend, we had a gap up on SPY. This is the SPY ETF. We're not looking at futures today. But anyway, this is a big gap up here. The Bank of Japan's major shift in policy decision is still causing some wonky trading action overnight in world markets. I mean, our yields are falling with the dollar and equities, or the dollar's climbing with equities while the VIX is climbing. I mean, it looks weird overnight. So it's hard to gauge market sentiment in the world markets overseas while the US markets are closed. But basically, we opened with a gap up. So I'm immediately thinking that the day's going to go bullish, am I right? So let's zoom in and see what happened in intraday. And I also wanted to mention another reason why I was feeling bullish was because of a couple of the earnings we had last night, especially from Nike and FedEx. Man, their earnings were lackluster, and somehow the market found a reason to feel bullish about those earnings. Initially, there was a slight sell-off, but after hours, those ticker prices surged. I think Nike was one of the best performers today because of its major gap up off of its earnings call last night, right? So that's another factor to get me on the bullish side. Because, well, if you get some solid positive earnings reactions and they were lackluster earnings, but the market's buying it up, then that's another reason, in my opinion, to feel bullish. At least for this short-term trend until those earnings reactions just start to go sour, right? So that's another reason I'm feeling bullish for the day. And of course, at open, you get that whipsaw action to weed out the premiums, to weed out all the weak hands and whatnot. But eventually, we made a big jump. We had a nice three white soldiers right there, if that's what you want to call the old school candlestick terminology. Basically, three big green candles there pushing the price up. That big jump in price, those big green candles happened when this economic data came out right here. And basically what we're looking at is home sales and consumer sentiment. Those were the big economic data points today, and home sales came in basically bad. Consumer sentiment was good. And some people might say home sales are bad, we should have went down, right? But in this environment, high inflation with the Federal Reserve hiking interest rates, we want to see bad economic data so the Fed doesn't have to hike rates, right? Bad news is good news in the current environment that we're in. Now, that was the initial catalyst to get our price going on the bullish side for intraday, I should say. We did actually get some oil inventory numbers right around here, and they came out bullish for the energy sector, and those names pushed up the SPY even further in a big way, right? But it seems like after all of that economic data, SPY had no more fuel left to get any higher, right? It seems like there's some sort of resistance zone keeping it down right here, and if you watched my previous videos, you would have been waiting for this point here. Let me show you. Now, here's the 4-hour candles on the S&P 500 ETF, and in my last video, I mentioned how we had a nice bounce off of this support level, a major long-term support level that I spoke of. And I mentioned that it looks like we were going green. We were about to come out of this downward trending resistance here. Wow, that was sloppy. Here you go. That's the downward trending resistance. It's a very short-term resistance. And this is all following a breakdown of a support level we were traveling in for months. I highlighted that level here. That's the support level that we broke down from. You can see that there. So a lot of the market thought the trends were changing. They thought we were going bearish for the rest of the year. That's why some people think this may be a dead cat bounce. We'll find out. But anyways, in the video, I mentioned the strongest and most important resistance level to watch on the way up if we are going to go green today, and that's this level that I'm pointing out right here. That was around the 387 price point on the SPY ETF. And look where the price closed today, right at this resistance level. It couldn't have played out any more perfect if you went long at the beginning of the day like I did, and then you scalped your position out right here at resistance. You would have had the perfect day trade today. You wouldn't even have lost on some time decay while the market was consolidating at this level for probably the last few hours of the day, right? So I'm very pleased with my easy trade. They never play out so easy like this, an easy bounce off support straight to resistance, man. That's textbook for a technical short-term swing trader like me, right? So where are we going to go from here? Is this a dead cat bounce? Are we going to continue upward, man? Let's check out the technicals and see what we're looking at. Now, the first thing you want to do to get the overall trend to find out if this will be a dead cat bounce, are we going to go up or down, is basically you got to get the overall trend, like I said. And right now what we're looking at is a long-term downtrend. That's basically the bear market since the war started. And then we have like a short-term uptrend. You could call this midterm. It's been like a quarter long, I guess. And then we have this immediate term that looks like it's going down. It looks like this little uptrend here is ending. So long-term down, short-term up, and immediate term, near term, that's down right now. So this can be a confusing setup. Some people are thinking that this is, we're just going to continue into the bear market. Next year we're having a recession. People are going to still be selling, right? And others think that this was the bottom. We're going up. This is going to keep climbing, man. This is just a small correction before we continue upwards. To be honest, it's difficult to say since the SPY, the market rejected this bear market resistance just like it has in the past. It looks textbooks. It looks almost too good to be true, right? It's kind of hard to call. It is the end of the year. We could start a new trend next year, just like we did at the end of last year. We started out a downtrend this year, right? In a big way, actually. So I'm kind of on the fence, man. I don't know if we're going to have that Santa rally. I don't know if it's a dead cat bounce or not. So all we can do is look closely, zoom into the technical levels, and just watch for reversals, pivots, dip buy moments. Let's zoom in real quick. Now here's the S&P 500 zoomed in on the 4-hour candles. The first thing I'm going to go over before we check out the technical levels is the capital inflows here. This is one way you can confirm bullishness for a day or for a few days. And capital inflows or outflows is basically when there is a red candle, that is an outflow, and when it's flat or there's a green candle, then that's an inflow. And as you can see, the inflows just kept climbing all day. They just did not go down at all. That's one way to confirm the bullishness, right? Now, the capital inflows are not always reliable, but when you have a really bullish day and just extremely bullish inflows, then it's one way to confirm the bullishness. It could be a little more confidence in your trade, right? And I do want to mention that the inflows look similar to this yesterday. They were basically on a very strong positive correlation. So seeing that yesterday and today, that gives you more confidence in your bullish notion, right? But that's just a little side note. Let's jump to the technicals real quick. Now, we already mentioned the nearest resistance here. There we go. That's the right way. Now, that's basically the 387 price point. That is still the nearest resistance. We couldn't get above it today. It's still resistance. If we get above it tomorrow, then it will be support. Am I right? And there's that nearest support level. That one's right around the 378 level. I mentioned that one yesterday as well. And just a reminder, these yellow highlighted support and resistance lines, those are the stronger support levels or resistance levels. Those are longer term technical levels, so they are a bit stronger. Like I always tell you, I do have some other shorter term support and resistance. Those are somewhat insignificant. They're a little weaker, a little softer if you want to call them. But you'll see those scattered throughout, and I definitely want to mention this one here. It's slightly above the 387 price point level. We can call it 388.5 or 388 3/4. Now that one is highlighted gray, but this one is a significant resistance level or support level. They're basically the same thing, right? Now this one is important because you can see the previous bounces that happened in the price action here at this 388.75 level. Now remember, like I said, sometimes support will act as resistance. Once you get below support, it becomes a resistance, am I right? And right now the price is right here just below that resistance level that I'm talking about. And if you like to follow textbook technical trading, then you would expect if the downtrend to continue, it should reject previous lows. And I would say these are the nearest previous lows. We had a nice ranging pattern, if you want to call it, and it did not get below this level here. So watch that 388.75. We can call that one a strong resistance level as well. And then we have the next nearest strong resistance level. We're going to call that 393 right there. These are the levels to watch, guys. Like I always say, guys, these are the levels to watch for reversals. These are the levels to watch for possible dip buy opportunities when they bounce off these strong levels. And guys, if you're short the market, if you think this is a dead cat bounce, then you might want to watch for people to go short here or at this resistance level. That's where, if you think this is a dead cat bounce, we're gonna go down very soon. These are the levels to watch here for that reversal. And if you want to be long on the market right now, then you got to watch for bounces off of these levels, guys. If we get a breakout here with momentum, you could go long there. Might want to wait for a retest to get another bounce to play that bounce play, right? And that's basically how I do it. That's basically how the technical trading playbook goes. But I'm not a financial advisor. Do not take my advice. I cannot tell you what to buy. I can tell you what I'm doing, though, right? Now, one thing I want to mention quickly is the fact that Zelensky is talking to Biden right about now while I'm making this video. And it seems like we're going to give him a lot more money, $1.5 billion in aid, military aid. We're giving him some missile batteries. They're saying that it's going to take months to train the Ukrainians on these missile batteries. So, I mean, that tells me the war is going to go on a little bit longer. We're going to see how the markets respond, how futures markets respond. They're about to open any second now, so this will be interesting. We'll see how this plays out tomorrow. Alright, now that's all I've got for the daily update, and as always, guys, be careful in your trading, be safe, don't put all your eggs in one basket, be patient, give yourself time, don't listen to the hype, don't FOMO, don't panic in or out of a trade, and stick to the trend. A trend is your friend, guys, don't fight the trend. And thank you very much for watching, I really appreciate it, and as always, hit the like, hit the subscribe button, all that good stuff. Leave a comment, any questions, concerns. Let me know if you think this is a dead cat bounce or are we going to have that Santa Claus rally. And other than that, I'll see you on the next video.